Hello, and welcome to the market update for Tuesday, December the 14th. I'm going to start off with the indexes today before I go into the direction alerts, because I want to show you, kind of the couple of the scenarios of what could take place here. The moves today or this week have kind of caught me a little bit by surprise. I was expecting the market to break out on this latest move. I thought maybe it would pause a little bit, or could pause a little bit at the breakout area, because we see that happen a lot. In other words, as we were coming up to this breakout area right here, I felt like we could move a little bit sideways through here. We saw a little bit of a dip on Thursday, and then Friday it looked like we were right back to being ready to break out. And even yesterday's move down into here, you still have this kind of a sideways pattern here, but then, you have the bigger drop today. So we've got to kind of examine, what could be going on. I think it's always important to remember, I say it all the time, but sometimes it doesn't always get through, that no matter how much experience you have in the market, no matter what your skill level is in reading charts or reading price action, you can never know exactly what the market's going to do, and the market will always throw you little curves every now and then, just to remind you that you can't know exactly what it's going to do. Now, that doesn't mean, though, that we can't analyze the probabilities and analyze what's kind of going on. It does tell us that we can't, in the very near term, day to day, we can't know exactly what move is going to take place. But it doesn't mean that we can't observe the overall trend and recognize when the overall trend could be changing. One of the things that with the sell-off right here, I look at not only what's going on the chart, but also I'd like to kind of combine it with kind of the psychological things that go on within trends. Usually when we start these bigger corrections, they start from, if this is to morph into a bigger correction, usually the starting point of that in this area right here would have been just complete overconfidence, expectation that the market was going to go, it was definitely going to go higher. No fear, expectations that you're guaranteed to make money getting in. I've talked about these types of conditions before. We just didn't have that up here. There's still a lot of that wall of worry, so to speak, that the market still seems to be climbing. And so I just don't see this being the start of a larger correction. You could make the argument that, with the Fed tightening, and there is a Fed meeting tomorrow, and so we're gonna hear about what their plans are. But I don't see any surprises there. I mean, everyone expects that the tapering is going to increase. It's going to be more of a hawkish Fed, and obviously there could be surprises as to how hawkish, or how are they moving up the time frame of when they may raise interest rates. That could be something that could spook the markets. But I mean, the markets are already seeing this coming, and so the traders tend to be forward-looking, and so I don't think you could always have a little bit of volatility around those announcements, but I just don't think that that's going to be kicking off a major correction. I could be wrong, like I said, if there is a surprise in there somewhere. But in looking at the chart here, a couple of things that like I said yesterday, I wasn't too worried about the pullback right into here, because we were still kind of in the sideways range. And even then, I thought this is looking like a little bit of an inverse head and shoulders pattern. And so I expected to move lower right at the open. It looked like we were right in that area. We're still kind of right in this area right here, where it could still be considered an inverse head and shoulders pattern. Typically, any sort of head and shoulders pattern, the right and left shoulders will tend to terminate the same area, and you could make the argument we're right in that area, although today's move is a little bit lower than that. We did have an attempted rally up here, so it did tell us that there were some dip buyers that were jumping in early. Now they kind of got crushed as we still ended up moving lower. We'll have to see how this candle looks at the end of the trading day. Do we rally back up a little bit? If we can rally back up, and even if we can rally back up to this area right here, right around the open, and close right there, that would be a pretty good sign that there's some buyers there. And I don't know if that's enough to rally off of that. But that is something I'll be kind of keeping an eye on. It could be the opposite. We could be closing near the lows of the day, and could kind of throw off that potential inverse head and shoulders pattern. Now, the reason why I was really confident that we were going to break out in this area last week was I was looking at this as kind of the ABC correction of that move higher right here. I've talked about this in previous updates. And, here we were sitting at about a 50% retracement of that move up. I mean, you had everything it was lining up there. You had an impulsive move up, what looked like an impulsive move up through here. Like I said, we could have, I figured we'd have a little bit of a pause and then break out. Now, we could still kind of have that. It is possible that this is kind of an ABC, a smaller ABC. We're at about a 50% retracement of this move up. So, again, this is kind of a critical area right here. And so these next couple of days are going to be pretty important. If we start dropping even further, then you have to start to look at the possibility that this is wave A, this is wave B, and then wave C. Typically, wave C is going to go beyond the end of wave A, so that puts you down into this area down in here, and that'd be a pretty deep retracement of that whole move up as well. Still possible. If you're still trying to look at this from a bullish standpoint. Now, I also think it's important in the days like this that you look at the bigger picture as well. That we zoom out a little bit, look at a longer term chart. Let's look at the 2-year chart. What's kind of critical here is we want to make sure that that this trend line holds. It's been intact for several months now. If this is wave A, wave B, wave C, and it comes down to that area that I was pointing out, we will break that trend line. Could it come down to if this is wave A, could it come down to the end of wave A right there and still go higher? Yes, and that's something we definitely watch. But typically, that C leg usually doesn't terminate at the end of wave A. It usually goes a little bit beyond that. So now, again, unusual patterns can form, but that's something to kind of keep an eye on. I think this low right here is absolutely critical, because if we break that, we're still looking at this low. This low could still possibly be broken in the context of that being just wave A, wave B, wave C, and then going higher off of that. But if we break below this low, we got to start looking at a much bigger correction. And by that, I mean, we might be correcting this entire move up. So if all you did was take a 50% retracement of that, you can see where this could really get ugly. But again, I just don't see that yet, just because of the starting point. Typically up here, that sentiment would just be incredibly bullish. I've been talking about this for a number of months, but I'm expecting when we finally have this larger correction, it's going to be very similar to what we saw with the internet bubble of 2000. That kind of just hyper bullishness that was taking place in 1999 and into 2000. There are so many similarities between that time period. Some of the new companies that are coming on board, the SPACs, There's you've got solar stocks, you've got electric vehicle stocks. There's a really strong similarity to the time periods, and so I'm kind of just expecting, although you don't usually get exact results from different corrections, meaning there's similarities between all corrections, but they don't always. It's not always the same factors that trigger corrections in the future, and that's because if it did that a lot, then we'd be able to predict them very easily, and it's not easy to predict when corrections start. But I just don't feel like we've reached that state of being hyper bullish. And again, what I'm basing it on is a sentiment feeling, which is difficult for some people because you can't quantify it. There's not a mathematical formula to say, well, this formula tells us that we were extreme. In fact, there are some formulas out there that have kind of pointed to extreme bullish conditions, but the psychological part of it just hasn't been there, and I think that's what's been missing. And so my theory is that we'll break out of this and we'll go to new all-time highs, and that's what will create that hyper bullishness. Is that we've got all these headwinds, we've got interest rates that are going to be rising soon, and the market just shakes it off and goes higher. I just think there's going to be a phase there that, and it could be real short. We saw this a few years ago where the market started rallying near the end of December. It pulled back in December. I'm trying to remember what year it was. Maybe 2016, somewhere around there, 2015. And we just started moving higher every day. And into January, we had this huge rally into January, and sentiment got very, very, very bullish. And then we had a bigger correction that took place shortly after that. I think something similar could possibly happen this time around, but we'll see. But again, we need to keep an eye on those critical spots on the chart. And in the near term, we're trying to see if we can find a little bit of support in this area here. One thing you could point to is that the NASDAQ is really the one getting beat up today. And remember, that was the one that was lagging. That's the one that didn't pull back very much in the previous little correction. We'll look at the Dow here first. The Dow is actually been holding up pretty well, and that's a little bit of a bullish inverted hammer candlestick formation where buyers had pushed. Remember, the Dow was actually positive earlier in the day as it attempted to rally. Kind of similar. We do want to see how this closes. I mean, if it can close right in this area right here, you've got a pretty good inverted hammer candlestick formation, which would be fairly bullish. The Dow wasn't real close to breaking out, the same as the S&P. You can see it had that deeper pullback through here that the NASDAQ didn't have. So it had a deeper pullback. Let me go to the chart of the QQQ here. And you can see, so this really didn't pull back that far. And now it's kind of playing catch up a little bit. Now, you could make the argument that this is a little bit of a bearish head and shoulders pattern on the NASDAQ 100. And this is one that this could be wave A, wave B, and we could get wave C that comes down into here, and it still wouldn't be retracing too far of that previous move up, so it could still be within that context there. So we might just be seeing a little bit of a rotation out of tech and into into some of the Dow stocks, into we have seen, the stocks kind of move into, or money move into stocks like Pepsi, Coca-Cola, some of the drug companies like Pfizer. They've actually held up. Those are more defensive plays, and those have held up pretty well. So we might just be seeing a rotation out of tech and into more of the defensive areas. You've seen utilities have a pretty good run recently. Those are all defensive type moves, and maybe that's just what's taking place, is that that correction, that deeper correction that should have happened in the Nasdaq 100 back here, is maybe taking place right now. Now notice how this drop right here, we're looking, when we were looking at the S&P, this move up, and we weren't yet at a 50%, or we're getting close to about a 50% retracement of that move. This is likely to get down to these lows, or maybe even below those lows. I don't think the move in the Nasdaq is done yet. It's not showing much of a, if you even look at the candle right there, had a little bit of an attempted rally here, but it's right at the lows of the day. Now, another reason why I'm not expecting a collapse here is the Russell 2000. Let's go to a 2-year chart on this. We've been looking at this range for a long time, and we did break out above that range recently right through here. We're down near the bottom of this. I think this is going to be very important to watch, because I think if we break that support area, that's huge. And remember, I talk a lot about the Russell 2000 as being kind of a leadership. I think if it breaks that major support, I think we're looking at a much bigger correction taking place, and it could accelerate pretty quickly there. So we're not too far away from that. So that's something to watch pretty closely. But like I said, there's still some room for it to drop and still be in that range. And as we've looked at the other charts, we see that there's still some room for those indexes to drop a little bit and still be within those key support levels. Now, I'm trying not to be, sometimes as traders, we can tend to carry biases into our analysis. I come up with some of these expectations of the future, but I try not to lock into them to where I ignore what's happening in front of me. One of the things I think it's important for every trader to do is you don't have to do it every day, because that could be maddening, but every now and then, take an opposite approach of what your expectations are. My expectations are that the market's going to hold up in here somewhere, and that we'll break out to new all-time highs, at least in the S&P. I'm thinking we'll break out to new all-time highs, possibly the Nasdaq 100 when it finishes correcting. But it takes a little bit of time and take the opposite approach. Okay, what if I'm bearish on the market? Or let me go look at the charts from a bearish point of view. Let me look at reasons why it's going to be worse. One of those, I could start with the Russell 2000 right here, that we did break out of this range, and then we're right back down in it. This could be the peak right here. And now we're starting that much larger ABC correction that can bring us way, way down. If I look at the chart of the Dow and long-term chart of the Dow, you can see how we had the steep, just connect the tops of the moves here. You have the steep rally right up to here, and now it's starting to flatten out a little bit, start to roll over a little bit. Look at that. Look how huge this support area is going to be on the Dow. Thank goodness we're not close to that right now. We're up here. But this looks like it's running out of steam. The Nasdaq 100. skipped over that one. Let's go back to that one here. If you connect the tops through there, that looks pretty sharp right through here. You got a nice little range right through here. But what if we break that trend line? We could be starting something. So there's definitely, again, this is definitely a critical area right here, not only in the charts, but also with what's going on with the Fed. It's no secret the Fed's trying to, trying to maneuver with, you see, the Fed's, the tough position of the Fed, if you're not aware of it, is they've got things that they need to do to get control of inflation, but they also have to make sure they're giving the markets plenty of signal as to when they're doing it. If they just start tightening right away, it freaks the market out, and you can have these massive sell-offs. And it's also, these little adjustments can have big impacts on the back end. I'm no expert in this, but I do remember in one of my economics classes in college that there was a little computer program where we had to input the different policies into the economy, raising interest rates. We would get inputs as to inflation numbers and things like that, and we had to make the decision to, we had to make monetary and fiscal policy decisions to manage that. And one thing that stood out, I don't remember too much from that class, but one thing that stood out was that I remember making an adjustment. I think I raised interest rates like 0.5% or something like that. And it swung the economy back the other way in a huge manner. And so this pendulum was swinging back and forth, and I was trying to manage this with these decisions I was making, and it was causing these big economic swings. Thank goodness I wasn't in charge of the Fed during my college years, or we would have been in deep trouble. But what stood out was how small the moves have to be, and you don't know the impact. You have to make a small adjustment, and then you have to wait to see what the data is. And that's what stood out at me, is it was so challenging to manage that. And so, although I don't know specifically what the Fed guys are going through, I do remember that experience, and so I have some empathy of how difficult it is to kind of maneuver those decisions. And you throw on top of that having to signal to the market that you're going to be making these decisions, and boy, that's just one job I'm never going to want to have. So anyway, that kind of gives us a little bit of an outlook here, and I've hopefully pointed out some critical areas. Very difficult for me to read in the next few days of what the market's going to do. I don't see any strong candlestick formations to indicate that we're done dropping, or even that we have further to drop, except for the fact that, particularly here on the NASDAQ 100, we just have a deep retracement. Usually when you get that deep, you're probably at least going to get down to this low, if not lower. So hopefully by Thursday we have a little bit clearer outlook. That'll be after the Fed meeting and all that, and we'll have a little bit better idea of how to trade it. Now, in these types of conditions, usually I don't want to do a whole lot. In fact, I am going to be stopping out of a couple trades I have on the portfolio based off of our stop loss prices. But I don't really want to be adding anything just yet until we get a little bit stronger signal at the bottom. Now, if you remember, I got a little bit more aggressive last week in the buying, and a lot of that was due to the expectation, like I said, that we may have a pause right here, but that we were going to break out. And since we didn't, like I said, we're getting stopped out of a few trades because of that. but we still have a lot of capital, so we're still fine as from the standpoint of when we do finally bottom out, we start rallying, we should start to see some positive results pretty quickly. All right, let's go back to the direction alerts. The reason why I started with the charts first, one thing just be a little bit different. I don't want to have those just the same process every week if I can avoid it. But we're the direction alerts are right smack in the middle on most of these, except for sentiment. Sentiment's still elevated, but momentum's right in the middle, and Brett's right in the middle. And what I want to point out, the reason why I went to the charts first is because we could go either way. If we find some support in this area right here and start rallying up towards those new all-time highs, we should start to see momentum move in that direction towards the extreme range. We're not in the extreme range, so we're not at a point where we're so elevated. And by the way, that was another thing too, is we didn't really get extreme on these indicators in the far right side of that extreme range when we started to pull back. Typically, that's when these larger corrections will start. But I also want to point out that if we do have further to drop, we could see momentum move back into the sell area. I don't think it's going to reach this extreme level unless we're in a much larger correction, and I think we'll know that we'll break those support levels before we start seeing that, and then if that happens, if we break those support levels and we're kind of in the sell range, then we're not going to be at a bottom until we start to get to the far left side of that momentum and sentiment, or not sentiment, but breadth. And here's the breadth indicator again, same thing. If we hold right here, we could see it start to move in that direction. If it breaks some of these support levels, it start to move down from there. Buy-sell ratios. Let me go back. We skipped the sentiment. Again, look, sentiment is still way high, and you could make an argument that it's too high. We're going to get a larger correction. It'll start bumping that sentiment down into these levels here of fear. The market's too confident right now still. That could be an argument that still does worry me that we haven't seen on some of these sell-offs that we've seen that those complacency levels remain pretty high. Buy-sell ratios, again, this was an extreme area right here that we started to rally from. And again, part of the reason why I felt like we were going to break out was we had reached those extreme levels. We were moving closer together. And then, like I said, just this week, we've kind of gone back the other way. Again, this still could go a little bit wider to reach that extreme level again. That would fit in with a little bit more downside risk if the market drops a little bit further. Although I think when we update from today's market update will be pretty close. Remember, these signals are as of yesterday's close. They update overnight, so I would imagine that we'll be pretty close especially with the sell-off in the Nasdaq today. I think we'll be pretty close to this extreme range again by tomorrow. And that could be an argument of supporting that we're near a bottom and should start to rally back up because we're already at kind of these extreme levels. And if there was we're just starting a massive sell-off, I mean, these would reach those levels that those huge levels that we saw back at the beginning of the pandemic when the market sold off so quickly. And I just don't see that. I don't see a reason for the market to panic like that. I just don't see any reason for that right now. So, all right. again, this sentiment indicator is still pretty elevated for the selling we've had recently, and we'll keep an eye on that as well. All right, now we still have a few more to go through. Let's go through the other charts here pretty quickly because I don't think there's a whole lot to really talk about there. Bonds. Now, the bond chart again to me is looking like it could go either way. If you look at just the chart behavior, higher highs, higher lows. This could be a higher low right here, and you're moving back up. But this also is an impulsive move down right here. So you had a pretty impulsive move up, impulsive down, and this looks a little more choppy. So although the trend looks, and it broke out right there on that trending move right there, could this just be wave A, this is wave B, and you're going to get wave C coming down, or just even the start of a downtrend in bonds? What I would look for, because we seem to be paused right back up here at this breakout area, is do we hold in that area there and start moving low? Do we go below this low? So if we go to a lower low right there, that would be an indication that we could be in a trend reversal. I think if we break back above this resistance area right here, that would be more bullish for bonds. You're expecting that higher high, higher low is going to continue. You'd start taking out this high at some point. But where we're at right now just leaves a lot of question marks as to what the near-term move is. I hate it when I have days like this over the last couple of days where I don't feel real confident in what the market's going to do or what these trends are going to do. Test your patience. You want to do something. You want to feel like you know what's going on. It's human nature. We want to feel like we have control over what the market's going to do, or that we can read what the market's going to do. And when it's not given those little clues, that tests my patience sometimes. Gold still looks like it's moving lower. You have impulsive down. This looks corrective. It looks like it should have another move down. Keep in mind the longer term context too. This is a major support level down in here. So this is looking like it's heading back down to this support levels. When you have this impulsive move down, that's corrective. That would be my expectations, that we move down into that support level. That's held 2 times before, so if it does hold again, that'd be a pretty good sign. This broke out to a higher high through here. If this can hold, not go any lower, and start moving back up again, you'd start looking to see if it's now trending up again, maybe it breaks above that high. But gold's been pretty, and you can see it's really been not doing anything for the last several months, just kind of moving sideways. Oil has been, looking. Well, we had the deep pullback right here. This was the rally where the market looked like it was going to break out higher, and then we had oil pull back again. It has a bullish candle today, so my expectation is that maybe this is the end of this little pullback right here. It's not just the bullish candle, and again, a lot can happen. This is based on right now. A lot could happen. That could change between now and the market close. That's a little bit of a hammer candlestick formation. If that can hold, you're looking at about not a 50% retracement of this move up, but probably about a third, or that 38.2% retracement, which is the kind of the minimum or the first retracement area. You look at the 382, the 50%, and the 618. Those are the Fibonacci levels that you look for on your retracements, your pullbacks. That seems to be reversing right at that 382. It filled in this gap right here. So we'll see if oil can start to rally. I think oil rallying is important because it would be an indication of expectations of economic growth. One of the reasons why oil has sold off or did sell off was that with that new variant going around, that if countries were shutting down, or they could slow economic activity, which would slow demand for oil. The big focus is really on China right now, because they're the ones that when any of these variants come out, they shut everything down, and they're one of the biggest importers of oil right now, and so it affects the oil market in a pretty big way. So, but that's something to keep an eye on. If oil does start rallying off of this, again, I think if we see oil start moving, if this is the correction, oil starts moving up, wouldn't be surprised if the market moves up with it. Now, this is, you could make the argument with this that, well, Jerry, isn't high oil prices part of the reason that hasn't that been a negative thing for the markets? And I would say yes back on here when oil was rallying, but I think with this deeper pullback and with the relationship between the demand for oil and economic growth, I think you'd want to see oil start rallying again, with that showing that there's that demand for oil. I think in this context, that would be more bullish for the markets if oil started to rally back up, especially after this deeper pullback that it had. Now, we could revisit that if oil then breaks out to new highs and we're back to the $5 a gallon gas or whatever. We could start to look at the trend of oil as being more bearish for the markets than bullish, and that's why it can be maddening trying to read all this stuff, especially if you're brand new. The trend in oil is bullish until it's not bullish and it's bearish, and but that's why we have classes like this. Is it allows me to point out situations, and you can start to learn how to match these charts up with market sentiment, which is a whole other ballgame when you start doing that. If you haven't studied Elliott wave analysis, I'd highly recommend that. If you're going to be a technical trader, I just believe you have to understand Elliott wave analysis. I've got some trainings on Elliott wave analysis on the YouTube channel. If you go to Traders Pro on the YouTube channel there, highly recommend you get familiar with some of those basics of Elliott wave analysis. That helps you understand the sentiment of the market, and like I said, it can be difficult for some people to learn, especially if you have more of a mathematical mind, because it's not equations and it's not 1 + 1 = 2. It's 1 + 1 has a high probability of equaling 2, and sometimes it might not equal 2, and that can be maddening for somebody that have more of an engineering mind. But it's important to learn that sentiment part of trading to really be able to look at the context of these charts, and like I said, to be able to recognize when bullish could be bearish and bearish could be bullish. All right, the dollar. To me, the dollar still looks like this is corrective. It still looks like it's in an uptrend, and this is just a correction before going higher. A closer look, you could, like some of these charts, that could be wave A of the correction. This could be wave B. You have kind of a opposite ABC pattern possibly in there, and maybe you have one more move down for wave C. So there is still room for the dollar to pull back a little bit, but ultimately I think it's going higher. Obviously, if it keeps going higher and gets back up above here, then we're not expecting that wave C or one more move down. But if it does start to move a little bit lower, I don't think that, just keep in mind that doesn't necessarily change the overall trajectory of the trend. It just could be that wave C, and then the expectations are that we would continue to move higher. Typically, if you're in a trend reversal, you'd have impulsive up, impulsive down, and I'd see more just corrective, more choppy right through here. Looks just a very high probability that ultimately we're going to go higher with the dollar. And the VIX, with the selling, and people were, you listen to some people on CNBC, and they're talking about the end of the world here. The market's going to sell off in a much bigger way. We got a lot further to drop, and I'm not seeing that on the VIX. Now remember, the VIX is kind of showing you what the professional traders are doing. Are they hedging? Remember, they're not going to pay that money to hedge and buy protective puts on their positions if they don't think they need to. So what I'm seeing right now is they're not seeing a huge need to add protection. Now, a lot of them added it right through here, so there was a little bit of a spike. So maybe they're already protected with those protective puts. They don't feel a need to add any more. But that put buying goes in stages. They don't spend a ton of money protecting the entire portfolio immediately, or they protect in stages, meaning they get a little bit worried and they buy for that protection. That causes the VIX to spike. If they feel like they've got to add more protection, that is when you see kind of the trending move in the VIX, where now it starts stair-stepping upward. You start seeing elevated VIX numbers. We're just not seeing that yet. Now that could change very quickly, and I would argue that if that Russell 2000 chart breaks that support level, you're going to see the VIX spike up above 30 again, and maybe even much higher than that. So, but as of right now, I'm not seeing professional traders feeling a huge need to hedge. That's usually a sign that, well, especially if it's not combined. Now, if you see the professional traders not seeing a need to hedge, and the sentiment in the market is at an extreme level, that's where I get contrarian. That's where I say, they are overly confident that the market's going to move higher. They see no need to spend any money on protected puts because it's almost guaranteed the market's going to go higher. And that's when I would take a very contrarian approach. But in this context, I would look at it as the market, they don't see a need for the market to move higher or to hedge, but we're not at that extreme sentiment level. So I still think there's room for it to rally. I think that'd be more bullish in looking at the VIX in that context. But again, that opinion can change very quickly if we break those support levels and see things really take off. Another thing is the Semiconductor Index. This tends to be a leading indicator of the NASDAQ 100, and right now this looks corrective. This doesn't really concern me too much. This looks like, well, before this looked like ABC. This looked like the ABC right here, and again, this is another reason why I thought for sure we were breaking out. Is it looked like that was the correction and we're breaking out. It's come back down again, but then overall this is choppy. This is, sometimes you can't always see that distinct ABC, or it doesn't always form that ABC. Sometimes it's just kind of chopping, but that choppy behavior is corrective. Market or trends tend to alternate between impulsive and corrective moves. That's how it creates those stair steps. And the fact that we're really moving more sideways right here would indicate that once that is done, we should break out to a new high. This goes back to what I talk about, maybe you've heard me talk about volcano tops. Typically when tops form, they tend to be sharp, meaning you have an impulsive move up followed by an impulsive move down, and then you start trending down. So you tend to get a pointy top. It's not always completely pointy, but it tends to have a little bit more of that look to it. Very rarely do you see tops form like this, where you move sideways like this, and then you start dropping. I call these volcano tops because it looks like the top of a, what typically people would illustrate a volcano to look like, with these look like volcano tops. That would be a volcano top. Now, although that can happen, I have seen tops form that way. It's just extremely rare. In fact, if I gave you a assignment to go out and find a chart of a stock that made a major reversal that looked like that, you'd be able to find one, but you'd probably be sifting through 1,000 stocks or so before you found one. It's just very rare. So because it's so extremely rare, you have to assume that it'll break out of that range. Now, it could be a small breakout. You could have just barely a breakout and then drop. And that would give you that impulsive up, impulsive down, the breakout, impulsive up, impulsive down, that little bit more of that pointy top. But from this standpoint, I just don't see it dropping all the way down from there. At some point here, we should get some support. Now, it could come down a little bit further. You have a little bit of support down here a little bit further. But ultimately, I think it'll break out higher, even if it's just barely. Maybe it breaks out higher and then collapses. But that tends to look a little bit more bullish. The Dow Transports, we compare this to the Dow Industrials, very bullish, at least right now, looking like a bullish inverted hammer formation right there. We should see the transport stocks start rallying off of that formation. If that holds again into the close, still looks like that into the close, that's a pretty bullish candle right there. We'll see if the Dow Industrials, remember they've been performing stronger today than the other indexes, so that could be a kind of a bullish signal that the selling in the industrials is pretty close to being done, at least in the near term. And then Bitcoin has been in a pretty big drop, and you got to watch this previous low right here. We break below that, and this could be in a bigger correction. And as far as that's a pretty deep pullback of that move, which means it's pretty likely we'll get down to this level here. Although there's a little bit of a bullish inside day today, and I know this stock is not a perfect. This is one of the stocks that. This is a company that allows people to trade Bitcoin, and so it's kind of a proxy of the Bitcoin. Hold on just a second here. My computer, I must have gone down here somewhere and pulled up a little box. But so it's not a perfect representation of Bitcoin, but for a chart that we can look at on Traders Pro, it moves about the same, and so we can kind of use it as a proxy. But we want to keep an eye on that low right there. It's probably going to get to it. Hopefully it holds. Doesn't break below it, but that's what I'd want to keep an eye on as far as that's concerned. All right, let's take a look at a couple of stocks. I'm not looking to get into anything today, but I do want to have a lot of you tune in to get some sort of trading ideas. This is the reward of hearing me babble on for an hour, going over the market update. But under computer and technology, there's a couple of stocks I want to keep an eye on, add them to the watch list. And by the way, there's going to be a lot of stocks I'm going to bump out of the watch list because they've just dropped down too far. But this Synaptics, SYNA, 96 strength rank. Switch the signals on. This has been in a nice strong uptrend, as you can see, and it looks to be kind of pulling back here. It's gone back to a hold signal, but that looks kind of like wave A, wave B, wave C. If this can go back to a buy signal, this could be off and running again. It hasn't really been beat up too bad with the latest pullback, and so we'll see if that one we'll put that one on the watch list. And then another one, right below it, the THRY. There's kind of a bowl-shaped move. It broke out of it. This looks like wave A, wave B, wave C. And we're pulling back to that breakout area. Has a little bit of a bullish reversal candle today in this area. So we'll see if that starts to rally back up off of that. We're not too far from going back to a buy signal. Well, maybe a little ways away from going back to a buy signal, but I like that pattern there. So I'll add those two. Let me go ahead and add them to the watch list before I forget. And then I'll put an alert to tell me when it goes from hold to buy. And let me add that other one to the SYNA. Well, I don't know about you guys, but I try not to have the volume up on CNBC during the day. The problem is that a lot of the stuff that goes on when they're interviewing people, it's usually a waste of time. These people are paying CNBC to have them interviewed and give them their opinions. Usually, you're not getting great information there. At least, hopefully, you're not trading a lot of that garbage that goes on all day. But there's good things that to listen to, especially little market indicators that they'll talk about that's important to know and kind of get a feel of what's driving the market. Some of the reasons that people are coming up with is why the market's going up or down. But I don't know about you guys, but I cannot stand the commercials. I mean, holy hell. I'm a capitalist, so I understand commercials, and I'm all for generating revenue through commercials, but don't show the same damn commercial 3 times in one break between the segments. It's maddening. I swear I'm about ready to I don't know. There's my rant of the day. I just was driving me nuts today. I'm like, that's why I have my volume down. There's that fine line between advertising and torture, and I think CNBC is crossing that line, and it's becoming torture. All right. Now, one thing I need to point out here on the portfolio, I do need to make a couple of real quick adjustments here. Let me make the adjustments first. NVIDIA, we got to stop out of. Maybe we hold it. It's right at our stop. Our stop is at 280. It was below it, but let's take a look at it here because it might be forming a bullish reversal. And we're right at, because our stop is right below this low right here. We're right at it. I'll have to make a decision on that, because if we're still above the stop, I might give it another day, just if that ends up being a decent bullish reversal candle. Now, the danger of that is it might not be done and it drops lower and you lose a little bit more money, but I'll have to make a judgment call on that one at the end of the day. And my judgment, just so if you're trying to follow along and you're making decisions, is just simply going to be, is it going to close below 280? If it's going to close below 280, I'm going to stop out. If it can hold it, even by just a 73 cents, I'll probably hang on to it. I do need to stop out of CANT though. It is below, currently trading $40.93. Stop is at 42. And I'm not seeing it's trading lower than where it opened. So I'm not seeing any strong bullish reversal there. Although, again, this looks like an ABC. But my stop was to stop out if it dropped below this area here. It's below it. I got to follow my stop plan there. So I'm going to go ahead and get out of this. And I can always get back in it if it starts rallying back up. And And I could do the same. I could do the same with NVIDIA. Just get out, and if it starts moving back up again, I could jump back in again. But I may wait till the end of the day on that one. But I'm going to go ahead and stop out of this one. So let's hit sell. 150 shares, and the current price $40.93. Now the others still are holding on. Lilly got real close to stopping out. Here's kind of an ABC, and it's had a decent move up the last couple of days. This is a little bit more of a defensive play, as I mentioned earlier. Stocks like, some of the Pfizer, Eli Lilly, these stocks have rallied a little bit last couple of days. Are more of a defensive play, and if that continues, we should start to see it move higher here. So I'm definitely just hanging on to this one for now. LPX, let me switch these to signals here. Pulled back the last couple of days here, but it's still, it's still holding that breakout. I don't see a reason to get out of this one. And LPI, it's an oil stock here. Again, our stop is down below here, so again, I don't see a reason to get out of that one. This looks like a larger ABC. I think oil, we saw in that chart of oil should start moving up with that little bullish reversal candle we see that's on it today. NVIDIA, like I said, I'll have to make a judgment call on that one. HBP, but again, this looks like just a little bit of a pullback after breaking out. Still looks okay to me. ACLS, this is concerning me a little bit. Our stop's down below here, but the fact that we broke out, you got a breakout move, and this is impulsive up, impulsive down. That concerns me a little bit, but I'll stick to my stop and wait and see if that gets triggered there. Hopefully, this can start to move back up. ASPN, it's construction, building and construction. Stops down below here. It's not looking real good, but it does have a little bit of a bullish reversal candle today. We'll see if that can hold. I added this one late last week, AMBA. I liked the breakout. I didn't want to buy the breakout. I felt it moved a little bit too far, too fast, but then it pulled back to the breakout area. Now, since then it's dropped a little bit. My stop's down below here, but that still looks, the trend still looks intact. It still looks okay. I'd like to see a little bit stronger bullish reversal candle today, but I think this one's still all right. That's it. Those are the positions. Now, I do need to make a correction from last week. I had someone point out when I was going through the charts of the portfolio, one of the positions we had was TGLS, Technoglass. Now, as you can see, when I pull up the charts, this is usually how it pulls up. And so last Thursday, I'm going through the list and I'm looking at this and I'm saying that looks fine. No reason to get out of that. What I didn't notice on Thursday was that there was some bad news that came out on Technoglass, and I wasn't looking at the full chart, and it had actually gapped all the way down to here. I should have stopped out. My stop was down below this low. I should have stopped out of it on Thursday, but I didn't see it. Now, on the portfolio here, these stops that I have in place, these are not actual orders. This is not a real I don't have real money in the portfolio. I run the portfolio as a way to show you how to run the system. Okay. So these stops are not automatic stops where an order goes through as soon as the stock hits this and it gets triggered. That's part of, I have to, that's why I'm not always, sometimes I might miss a stop immediately. I try to watch this every day as best I can. But my real trades obviously have priority over virtual trades. And so sometimes I miss stops when they happen. But thank goodness, one of you guys out there, one of you participants out there, let me know. There's a couple of you let me know that I missed that. And so I stopped out that on Friday. And so TGLS. And you can see it actually, I took even a bigger hit. If I would have gotten out on that day right there, I took a bigger hit on Friday when it dropped even further. So took a pretty big hit on that one. But again, that doesn't happen very often where you get a gap so big that it's out of the range of what you're normally looking at on the chart. And because I knew they didn't have an earning, typically you'll get those moves around an earning announcement. And since they weren't reporting earnings, I wasn't expecting anything like that. And so I just missed it. So anyway, there's a little bit of clarification there as to why I'm stopped out of TGLS. And real quickly, because I did make a few changes, let's go to the trading history here. So if those of you that are trying to keep up to speed with everything I'm doing here. So these are, I think we stopped out of some of these last Thursday, but these are some of the things I've done just over the last week or so. And I'll leave this on the screen for just a few minutes here, but you can always go through the recording if you want to get the specifics. You can pause the recording and write all that stuff down, or if you're keeping track. But you can see on TGLS, I took a huge hit on that, almost a $3,000 loss. Remember, I'm usually only risking about 1,000 to 1,500. But that's an example of what can happen sometimes. You get a move that comes out of nowhere. There was a short seller that wrote an article about some accounting practices that they felt were wrong with the company, and the traders freaked out and they just sold. And now, one thing to keep an eye out about with this though is that sometimes you'll get a move in the opposite way that's in your favor. A company gets bought out by another company, the stock gaps way up, and we make a ton of money overnight. That'll happen too. So don't feel like only bad things can happen where it gaps down. Sometimes you don't remember when it gaps up. We think, we look at that when it gaps up. We look at it as we're smart. We somehow knew that was going to happen. And then when it doesn't, when it guts down, it's out of our control, and there's nothing we can do about it. But these tend to even out, and sometimes you have to remember when things work in your favor. But that was a bigger hit, and it's part of the reason why we're down. We've been able to avoid on these sell-offs. We've been able to avoid big drawdowns. We hadn't gone below 90,000 for most of that drawdown. That's part of a big reason why we're down near the lower part of this. Now we'll make that up. We're managing this thing right to where once the market does rally and we get into some of these positions start taking off, we have fewer positions that have those huge big drops. We'll get right back to 100,000 pretty quick. So I'm not too worried about that, but that was a pretty big hit. All right, I've got to wrap things up. Thanks, everyone. Have a great week. We'll see you Thursday for the stock-specific class. Bye now.